This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks on Stockbox with our research analyst Alan Green. And Alan, today you're going to be talking to us about a mining company, Cobra Resources, and a pharma company, which is Orphan, who I had the pleasure of interviewing their recently appointed CEO at the UK Investor Show. So yeah, we're going to talk about two different companies there, but how are you doing first of all?
Yes, I'm very good, thanks, Mark. Yep, been a busy week again, but got back from Cornwall, and of course feet haven't touched the ground, as is normally the way. But certainly, Orphan have been prolific as an organisation throughout COVID, of course, with their human challenge testing centres. But I'll come to that shortly. We'll look at Cobra Resources first of all, if I may.
Sure, go for it.
Okay, so Cobra Resources, a London-listed mining and exploration company with assets in Australia. The shares are currently trading at 2.12p, giving it a market capitalisation of 9.2 million. They've been as high as 3.2p on the year and as low as 1.1p. The company are unique, I say they're unique. They specifically have an asset called Wadena, which is in the Gawler Craton in the Southern Territories in Australia, west of Adelaide, and that region. The Gawler Craton is the oldest and largest geological province in South Australia, which is it's red hot for IOCG assets, which of course are the iron oxide copper gold geological features, which have been mentioned by other companies, including, of course, Cobra Resources with their work. So the Wadena project, the company currently owns 65% of the asset, and they're on course to complete an earn-in to earn up to 75% of the assets later on this year. The other company that owns, or the company that owns the balance of the asset, is Andromeda Metals, and as I say, Cobra is undergoing steps and spending and developing the asset to earn up to 75% in the middle of the year. So Wadena, as I say, in the Gawler Craton. The Gawler Craton is home to some of the largest iron oxide, copper and gold discoveries in Australia, and these include Olympic Dam, Prominent Hill and Carapatera. The Wadena project already has a mineral resource estimate grade at 211,000 ounces of gold, and those are with grades ranging between 16 and 37.5%, which is pretty good. So the company has 22 prospects across the area, which is characterized by potential open pit high gold intersections, but also in the drilling work it's undertaken, the company has discovered rare earth elements in commercial quantities, both above and below the gold mineralization. So it's in effect two valuable assets are rolled into one. So overall, the company describes the Wadena project as one large copper and gold prospect and 5 IOCG, that's iron oxide copper gold targets, with of course the rare earths that I've just mentioned. Also in the area, there's a well-developed infrastructure, plenty of existing processing centres, roads, railways, and so on. So there's excellent access on the ground there. To date, the company have undertaken extensive geochemical and assay testing, undertook a 44-hole reverse circulation drilling campaign that's around 6,000 meters, identified a number of prospects within the area, including the 1.1 kilometer anomaly identified at what's referred to as the Clark prospect. Back in February this year, the company raised 945,000 at 1.5p. So obviously, the share price is now sitting well ahead of that raise. So the shareholders taking part in that will be very pleased, no doubt. What that means is that all of the exploration and drilling work that the company has planned for this year is fully funded. So that's a very important factor. And as I've already said at the start, the company, on the basis of the way it's working at the moment, expects to complete its 75% earn-in during Q3 2022. Also worth noting that one of the board, David Clark, who's a non-exec director, participated in the raise, and that's extremely important. That there's board involvement at that point. In April this year, the company, and this probably accounts for the blip in the share price really from February onwards. In addition to the work and the results that were coming back from Wadena, the company was granted an exploration license east of Wadena, which is a further 536 kilometers. The area they currently have access to or own the exploration licenses to is just over 1,800 square kilometers. So this additional 536 kilometers adds a substantial additional asset to the group, and obviously increases the valuation of the company proportionally. Now, this area is prospective for what's called ion absorption clay, IAC, and of course gold. Ion absorption clay is it's a well-known geological asset that is known for housing rare earth elements. So it's very similar to Wadena in this regard, and it's also flanked by Wadena Gold and hematite, the Wadena Gold and hematite project, and also the Paris Silver project. So a lot of activity already in the area. Worth noting as well that this new exploration license is 100% owned. Mm-hmm. Then on May the 5th, we saw further activity and obviously further support in the share price. The company announced that another asset in Wadena, the Baggy Green asset, fantastically named, and there's a region between the Baggy Green asset and the Clark prospect, approximately 4 kilometers. Rare earths were intercepted again across an area between these two, and there was mineralization in all directions. So some 85 holes have been drilled there. That's 89% of the holes drilled, intersected an average grade of 530 parts per million total rare earth oxides, and that's pretty well at commercial level. And the company said it will favorably contribute to the maiden rare earth resource estimate that the company is currently preparing. So a bit more about the board now. The chief executive is a fellow by the name of Rupert Verco, and Rupert came to London last month to have a meet and greet with investors and obviously put his name around the city. Rupert has 14 years experience in Australia and around the world, and has a tremendous amount of experience in developing assets and also getting involved in gold, copper, uranium, tin and iron ore assets. He's joined by the exploration manager Robert Blythman, who's over 15 years exploration experience focused on southern Australia, Victoria and the Northern Territories. So he's a tremendous amount of experience in that area. Greg Hancock is the chairman. Greg has over 25 years in capital markets and corporate finance, particularly in Australia. Dan Malling is the non-executive director, and he's the UK contact in a sense, and he's a partner of Arana corporate advisory boutique in London. And of course, I've already mentioned David Clark, the non-executive director. Dave is a geologist with more than 50 years experience, so his participation in the fundraising, I think we can view as a pretty important step for the company. Just to say something about another project that the company owns, they also own the Prince Albert Copper Project, which is a former producing mine, which was founded in 1907 in the Adelaide Fold Belt, Historically, grades of between 3.5% copper were discovered there, but the area has been unexplored for over a century, and they're currently working on a plan and program to commence preliminary exploration activities there on top of the work they're doing at Wadena. So there's an awful lot more to come. Certainly the grade at Wadena. If you go to the new website, which was launched last month, there's a lot of media on there. You can see Rupert Verco talking about the drilling that's taking place in Wadena and what they found to date. But certainly, on the face of where the company seemed to be, this looks to be a good point to enter the company at 2.1p, well off the year highs of 3.2p, but of course well above the level at which the funds were raised early this year at 1.5p. So looking very good for further developments later this year.
Okay, good. And they've been around for a little while, haven't they? But it seems that things maybe gone a little bit quiet. Did they lose focus, do you think, and sort of now bringing it back into sort of a renewed interest, let's say?
Yeah, I think it's taken a while for them to find their feet, but certainly, Rupert Verco joining the company seems to have been a catalyst for operations, and obviously we had the fundraise back in February. So if we look at the share price action over the past year, I mean, the share price was pretty well flatlining from June last year up to February, and at 1.2p, all of a sudden it leapt into life. We had the fundraise at 1.5p, and everything's gone a lot higher since that point. So I think that's it doesn't oddly follow the normal pattern of resource stocks in terms of share price performance. And I say the normal pattern, of course, for the last year, Mark, we've been discussing this malaise in the sector, and the charts or the share price performance charts really do mimic a flat line, or in some cases a gradual drift downwards, and Cobra has certainly bucked that trend in February, sort of with raising just under £1 million, and of course that's a big important step for the company to take. So we look forward to hearing more from the group. Certainly the group seem well managed. I think also the participation by David Clark in the fundraising earlier this year is significant, because he's an experienced geologist, and obviously somebody like that gets involved and puts their own money in. You sit up and take notice. But certainly there's a lot more to come, and I think we're going to hear a lot more from the Wadena project, and also hopefully from the new area that they have to the east of Wadena, and of course the Prince Albert copper project too.
Okay, excellent. Okay, well, thank you for that. That's a bit of an introduction there to Cobra. Let's see how things develop there. Good that the CEO's getting around and putting out some media. That's important as well. So hopefully they can start to develop that story. Let's see where it goes. Okay, so on to pharma now, and Open Orphan.
Open Orphan, yeah, we've been working with Open Orphan for a number of years, and I think the executive chairman, Carl Friel, needs no introduction. Carl is a man that sort of backs his judgment with his own money. He's got Ragnar Capital and a number of other investment vehicles that he uses to invest into the companies that he works with, and of course that includes Poolbeg Pharma and other assets as well. But Open Orphan has been his main focus, and he was instrumental a few years ago in the reverse takeover of Venn Life Sciences, which reversed into Open Orphan, and subsequently the acquisition of hVivo. So putting the two together has very much been a master stroke, and I suppose Open Orphan can now be summarized as a contract research organization, using the Venn research team to undertake work directly for companies. Of course, the company announced it's already announced this year a £14.5 million contract for a new challenge trial, and a £7.5 million influenza challenge trial, and a 5 million respiratory virus challenge trial. That's really since the year end. So very strong performance from the group. So the company earns from hVivo, as I say. Now hVivo owns Europe's only 24-bedroom quarantine clinic with on-site virology, and it expanded that operation both nearby from the Queen Mary Hospital in East London and also in Manchester too. So it's able now to offer quarantine research to undertake human challenge trials, and that's where volunteers are given a mild dose of the drug and are treated under controlled conditions, where they're treated with various vaccines to see how the disease responds and also how the patient responds too. And of course, from this, an incredible amount of clinical data is obtained, and the company can then work towards and help the pharma companies develop a vaccine. Now, HVO is headed up by Dr. Andrew Catchpole, who oversees the clinical operations of the company. And of course, during COVID, Open Orphan were pretty well in the news every single day with the quarantine centres, obviously for COVID testing, and the national press got involved. Many journalists got involved, and they volunteered to take part in the human challenge trial. So through that work, Open Orphan has now established itself as really a global leader in human challenge trials. It was awarded a 40 million contract by the UK government during the COVID pandemic crisis, and of course it's gone on from there. Now with that knowledge, it's still working for the UK government on a number of levels, but with that backdrop, it's able to attract business from large farmers and so on. So it's highly significant. Also, I know you interviewed him, Mark. Mo Yemin Khan, the chief executive, was brought into the company to head up the drive early this year, and certainly the company announced full year results this week, and Mo said in those results that 2021 really was a milestone year for the company. And it's important to note that during that year, that's of course the full year to December 31st, 2021, record revenues of 39 million, up from 22 million previously. That's up 76%. EBITDA, positive EBITDA of just under 3 million. That's a 9 million improvement from the EBITDA loss last year. Cash of 15.7 million in the bank, and order book growth of 11% at the end of the year to 46 million future contracted revenue. But post year end, the company has now got 64 million of order books, 64.2 million of order books, which will be recognised across the coming years. And on top of that, of course, it's winning these contracts all the time. The company also has a centre called Flu Camp as well, and again the Flu Camp is it's set up to do the same thing, to try to find a universal cure for flu, because of course, as we know, the disease evolves every year, and it's very difficult to get a handle on it. Once you've got an antidote or a vaccine for one flu strain, another one comes in. So the company working towards finding a universal flu virus. But certainly, going back to the numbers and the way the company is growing revenue-wise, I'm astonished to see that the company is still, again, we look at the share price performance for the year, the shares are traded as high as just under 40p on the year, and we're now trading at less than half of that, at 14.6p, which gives the company a market cap of 98 million. Now, I know for a fact there are a number of equivalent pharmaceutical companies that are not EBITDA positive and are running at a loss, turning over similar amounts of money, that on the NASDAQ have a market capitalization of up to $500 million. So I think Open Orphan are fundamentally undervalued, and I know there are a lot of research analysts that share my view on this. They have an incredibly strong position in the market with both the research through Venn Life Sciences, and of course the the human challenge trial centres that the company set up through HVivo, and going forward, the company is well capitalised. It has plenty of cash in the bank, and of course, it spun out Poolbeg Pharma last year, which of course the market is well aware of. That in itself is developing rapidly as a capital light company that's developing cures for infectious diseases, working with big pharma at the same time. Open Orphan still, of course, has a stake in Poolbeg Pharma. So on a number of levels, I think Open Orphan offers great value right now, and it's under great leadership with Carl Friel, Mo Yamin Khan at the helm, and of course Dr. Andrew Catchpole overseeing the scientific developments at the research centres run by HVivo.
Excellent. Okay, well, thank you for that. It could be the COVID shine, let's say, coming off, because COVID is effectively over for the moment. Maybe the COVID stocks have lost their appeal. But, that company, I spoke to Mo, as you said, at the UK Investor Show. I was quite impressed with him. He's got some very ambitious goals for the company, and for a pharma to be profitable as well as doing further research for the upside. That's not normal to find that in the sort of lower end of the market, is it? A bit like mining companies. You don't often find a junior mining company who has income and is exploring further. So it's a good mix to have.
It is, and just back to the price action chart again. I'm just looking at the chart for the year. Now, on the 8th of March, the share price dipped down to 11.5p, and although it's been wandering around since then, it has put in a series of higher lows since then. So it's interesting to know that although with the results out this week, as I look at it, it's 14.6p, but it's put in a couple of higher lows already this year. So that may have been the 11th of March dip to 11.5p, may well have been the turning point for the company. We could see the company on its way back now, but that's just from a charting standpoint. But obviously, charters will be listening, so that's something that they will no doubt take note of.
Okay, thank you very much, Alan, again for your time talking to us there about Cobra Resources and Open Orphan. And I wish you a pleasant weekend, and we'll speak again soon.
Thank you, Mark. Have a great weekend.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.